All right, so thanks for joining me. In today's video, what we're going to do is we're going to do something a little different. We're going to try it out, see how it goes. Let me know if you like it. I'm going to go ahead and browse some videos on TikTok and give you my opinion on them and just my own personal thought process behind what people are saying on social media. I know there's a lot of new people out there that are doing financial advice. There's the FTX problem that has happened over the last year as well with a lot of influencers and YouTubers and people pumping that. And as you see in this channel, I don't really pump anything beyond just learning and getting a good education. But when we go ahead and look at this, let's see what we have to say. I'll give you my reaction, my opinion, and maybe you'll learn something and some takeaways. So here we go with the TikTok. I'm going to go ahead and start out. We'll take a quick peek and listen, and I'll kind of give you my my idea and opinion behind it.
All right, this is why I hate options. Number one, it was like what got me into day trade. Okay, the very first day trade I took was an options trade on Robinhood, and I lost $100. One, because I did.
Okay, so first off, if you're trading options, I would say don't use Robinhood. Robinhood's known to kind of scam you out. There's a Robinhood, let me see if this will pull up, Robinhood lawsuit. So if you're doing any kind of option trading, there's a lot of lawsuits that were regarding Robinhood. And also the platform and so on, it's not catered towards options. I would say you're either going to want to go with two broker platforms unless you're living like outside the United States, but probably Tastyworks and Thinkorswim by TD Ameritrade. I use the TD Ameritrade platform, but Tastyworks, both developed by Tom Sosnoff. And you can see here with the Robinhood, there's basically there's a ton of lawsuits there. They also did a lot of call it order flow issues that they had with Robinhood back in the day. So just look that up and you'll see what I'm talking about. So anyway, if you're doing options, don't use Robinhood, I would say.
I didn't know how to use the Greek. I saw maybe 2 videos on Ricky Gutierrez, and I lost that $100 instantly because I thought option trading would be easy, and it wasn't. I had no clue what I was doing. So that.
Yeah, I mean, most people that get into the business, they always think it's quite easy. Just in general, it all looks easy from the surface level, right? But then once you do it or you attempt to do it, then it becomes more difficult. Just think of any career you had, you're not going to learn it within, a couple of videos.
Instantly kind of had beef with me. I was like, I hate options, I'm doing something. Then I moved over to foreign exchange, and I've been doing Forex ever since. And you're probably saying, wait, I thought you trade the S&P. I do trade the S&P just through a foreign exchange brokerage, which essentially just uses leverage.
Okay, so Forex moves a lot slower. You need a lot more leverage when you're dealing with Forex. I don't really like trading Forex. It's not my thing. You're trading currencies in pairs, so it's just not my area of expertise. But when you deal with Forex, you just need a ton more leverage because they're moving like micro movements. So it's much more more of a pain from when I've tried it in the past.
Which pretty much gave me the ability to trade the S&P with a small account size up to literally $50. But now, why do I hate options? There's just way too much going on when I could be making just as much money as you from options, but my life is just so much simpler. I don't have to worry about the Greeks. I don't have to wait for the 9:30 bell. I can trade whenever I want. And your account.
Okay, so trading whenever you want. Sometimes, I get it. Like some people want to trade all the time, but eventually you'll want to have a life. And it's nice to have the closing bell and have things kind of stop. So anyways, just my personal thought on that one. Okay, let's see here. Well, that's a React video. Let's see. Day trading. Let's look for something options related. So options trading specifically. Okay, I don't know. I haven't used TikTok ever, so tough to really say. See more, maybe. Nope, that's account. You can see it's my first time. Okay, let's see. This trade's unstoppable. Trader taking ski line traders club by trading indicator options trading. Let's see what this one's all about.
क्या हुआ लाला मार्केट में फिर लॉस हुआ एक बात
It's a foreign language. Okay, let's see this one.
Guys, I'm having a record trading month. On the first, started off nice with 1,000. Next day, 1.5K. Keeping it alive with 1.3K. Big green streak, 200, kept it light. Next Monday, minus.
And this guy looks so happy. He kind of reminds me of my son. So
300, it's alright. Does sit it though with 850 the next day. Check this out, bro. 3 bands. Keeps going, bro. Another 2K. And ended off with 863. I'm on a super big green streak, right? What's really important, I keep my ego in check. If I'm not smart with this, the market can take my money away in an instant. It's more success.
Oh man.
So guys, I'm having
This guy made me laugh. Not much educational content there, but anyway, that was pretty funny. Okay, let's see. That's 4x, 4x, 4x. Let me see if I could do a hashtag here for options trading. Let's see, strategy, maybe. The best options tool. Okay, let's see.
Do you trade options? Are you new to trading? You're not going to want to miss this tool. Listen up. What I'm showing you guys today is called Options Profit Calculator, all right? You guys who trade options, who trade options on a regularly, you're going to want to see this and you're going to want to visit this without a doubt. This website gives you the ability to find out how much profit you're going to make and how long it's going to.
Okay, so, I mean, the brokers already have a tool. It seems like it's just trying to sell a tool here. But let's see what
take
we've
for you
got.
to get there at what strike prices and what option expiry date that you guys choose. So let's take a look. Let's say we buy a long call. We press long call. We choose the symbol. We choose the option. So let's say we chose the 900 call. We're going to put in how many contracts we bought, what price we bought it at. We're going to agree to the terms and press calculate. This chart here tells us our profits and how fast we're going to get there. If we hit 940 by today, we'll hit 363, and if we hit $940 by February 5th, we'll only make $290.
Okay, so what this tool's doing is it's a calculation based on the day. Oh, by the looks of it, it's by the day relative
Guys,
to
enjoyed this video.
what the profit will be. So it seems like it's selling a tool, but it's looking like which price it'll hit and then what you will make based on, let's say, February 2, 3, 4, and 5. So actually many of the brokers already have this tool. If you actually go ahead and just kind of take a look on the trade tab, if you go here and you go into, actually, let's just do it this way. I'll switch my theta right here. We'll zoom in. We'll go to option theories and Greeks. There it is. And it's called theoretical price. What's the calculator there? There's the theoretical price. So now what we can do is take a look saying, hey, on which date will it happen? So learn to use your broker tools, right? Is what the point is. On the day of, let's say, June, let's see, am I in June? Let's say in July, since I'm here in July. On July 5th, what will be the price of that option? Right there. It'll be $2.74. That's the Theo price. It'll be right there. Now, if let's say the stock price goes up, well, 2 or 3% or whatever, you can just basically add in a few bucks. So let's say we go in, 2%, 1%, you could add in different things, but here we're just doing it based on a per dollar return. So we'll just say $2, but if you want to convert it to a percent like that other website, you could convert it to a percent, just take a percentage of your actual value, but let's just say $2. And if it goes up $2 right here, that option will be worth $3.70. So from $2.92 or so, it'll be worth $3.70. So you'll make, about, what is that? About less than $100 or so, but that's how you do it. That's basically the tool behind it, which is the same exact thing that he's talking about right here. And they have them in the brokers. I get that, hey, you're so awesome, they're going to check it out and all that, but that tool is already available in most brokerage platforms. And by the way, you could do that same calculation in other ways as well. Okay.
All right, this is how I made $104,000 in the stock market today. I'm just kidding. I did not make that. That was just me messing around, learning how to paper trade on Webull. I put in $1 million, and I was just messing around with it. Made a quick 10%. SPY, I was just like literally buying SPY and then selling it, seeing how to work it, and just was up a ton, which is kind of crazy. But yeah, I'm starting with a $500 account because this is how much I'm gonna put in when I.
Okay, so there's a lot of concentration of risk there when you're putting all that money into one segment and so on. One vehicle, so gotta always be careful. Okay, let's see this one.
Here are 5 easy ways to make money trading options in the stock market. Number 1, as soon as the market is
I do like the music. Music's kind of interesting and catchy.
about to close, buy put options for a stock that has had the highest or second highest, maybe even third highest returning day. and sell it the next day as soon as the market opens. The reason you can make money using this strategy is because stocks tend to sell off after they have had a high performing day, as people obviously take their profits and letting them, bubble up throughout the day. And especially if it's the 52-week high and it's a bear market, you're almost guaranteed, there are no guarantees, but you have a very high likelihood of making a decent amount of money. Number 2, always trade call options during the first 5, 10 to 15 minutes.
Okay, so there's a lot of conflicting information the first 5, 10, 15 minutes, and let me go back and dissect this one. There's a little bit more to this. It seems like I probably have to log in to see the full video. Let's see.
Number 1, as soon as the market is about to close, buy put options for a stock that has had the highest or second highest, maybe even third highest returning day.
Okay, so I definitely don't agree with that, because in theory, yes, a stock that's stretched has a higher tendency to maybe pull back. So you could buy a put option. The other problem with that is it depends on the days. Like you'll also have the volatility problem that will come into effect. But let's say we take a look at something like Nvidia here recently. Even though this stock gapped up. Okay, so let's just look at it right here. Stock had a big gap up. You bought a put option, but that stock continued to power higher. Or right here, let's just say you got in on that day. Stock went high. You bought a put option. Boom, that put option you got toasted. So you can't really take that. You got to learn to spread your money and capital. Really is the name of the game. Learn to manage risk.
And sell it the next day as soon as the market opens. The reason you can make money using this strategy is because stocks tend to sell off after they have had a high performing day, as people.
So yeah, statistically speaking, after they had multiple days, it could be multiple weeks. I mean, a market could run for weeks or months at a time.
People obviously take their profits and letting them, bubble up throughout the.
And this is assuming that people take their profits, assuming people are day trading. What if I'm a long-term investor? What if I'm a swing trader? What if I have a 30-day option instead of a 1-day or 2-day option? So that will vary, of course, as well.
Day, and especially if it's the 52-week high and it's a bear market, you're almost guaranteed.
Well, yeah, bear market. I mean, most things typically go down in a bear market, but then in a bear market, usually you wouldn't have a huge 52-week high or pop, right? Because you're in a bear market. So how would you have a 52-week high? So it would be now a stock's an outlier, which is usually a strong stock for a bear market, and in that case, it could follow through.
There are no guarantees, but you have a very high likelihood of making a decent amount of money. Number 2, always trade call options during the first 5, 10 to 15 minutes. Here are.
Okay, so that's all I got out of that video. I think I probably have to log in to see longer videos. Who knows? Let's see what we got here.
If you're having trouble in the stock market or want to learn how to trade stocks the right way, watch this video. Okay, so the right method to trade stocks is by using supply and demand. And right now I'm going to give you a quick rundown and a quick example to really show you how supply and demand kind of works in the market. Now
Yeah, I mean, supply and demand is kind of a basic core, but you also, it's about learning risk management, capital allocation, money management, that kind of thing as well. But yeah, okay. It's a video, so it's fine.
This example, let's say for some odd reason, Apple decided to make iPhones $1 today. The demand for iPhones would increase extremely because a lot of people are going to be like, oh, I want an iPhone for $1. Now imagine if the iPhone became $1,000 the next day. A lot of people aren't going to be buying the product, so they're going to have to lower the price of the iPhones to get more sales. Stocks works in this very same matter, and it's actually where the term buy low and sell high comes from. When price gets low, people want to buy because it's at a good price. When price gets too high, people are going to sell off to push it lower to get in.
Yeah, they're trying to collect profits, but yeah, when stocks are coming down, it makes sense, yeah.
And at another good price, and this is repeated over and over and over. Now that we have a general understanding of what supply and demand is, let's actually see how to draw supply and demand in the market. So what we want to look for in the market is aggressive buying and selling. We want to see huge green candles or huge red candles. When you see huge green candles, that's going to indicate
I would assume huge, he's talking about wide price spread from the low to the high.
Demand. When you see huge red candles, that's going to indicate supply. In this instance, we have nice strong green candles coming off of this zone, so we know it's a demand zone because there's aggressive buying. Now to draw demand, I like to use the rectangle function, and I focus on the tip and the bottom of the red candle before this break. Now another example of demand, we just use the rectangle function, focus on the tip and the bottom of the red candle before the green, drag it over, and then you can see that it even uses this as demand another time. It comes down and bounces off. To draw.
Yeah, the only problem with this is when you look at just a single candlestick, you have to also, in conjunction, look with swing points as well and multiple points. So you could look at that in theory, that where the stock changed direction, but you have to be careful because you're looking at a single point, but at the end of the day, it still comes down to learning to manage your capital. So let's say you were wrong and you put in, let's say, $5 million. That's a huge problem. Whereas if you're wrong and you put in $5, it doesn't really matter. But what you're doing is you're taking a snapshot on just a single time frame right now. So when you're looking at it, you've got maybe a 5-minute chart. I can't tell exactly. It looks like a 5-minute, 10-minute chart over there based on the times here at the bottom. But you're taking a snapshot of a certain time period, and then when you take that time period, you're not taking into account the long-term investors or the medium-term investors and so on. So you need to look at 3 time frames usually. So I would say for most people, daily, weekly, monthly is good. If you're doing day trading, something around 65-minute chart or a 30-minute chart or a 95-minute chart. Why do we not use hourly? It's because they don't break down evenly. But you're basically looking at, let's say, 65-minute chart, a daily chart, and maybe a weekly chart. So it's usually, I think, more precise because now you've got multiple factors in there.
Draw supply zones, you want to focus on the green candle that is before the red candles. So we're going to focus on that green candle right there. Notice how the red candle was higher. We were still just going to drag this to match the tip of whichever candle is higher. Now, if I drag this zone over and keep going to the right, you can see that it uses this supply zone eventually. Now, to trade stocks efficiently, you only need the daily time frame, the hourly time frame, the 15-minute time frame, and then the 5-minute time frame.
Okay, so we kind of just talked about that time frames. He's doing multiple time frames, which is good. That is a benefit. I would say get away from the hourly because, again, we're trading 6.5 hours in a day. From convenience standpoint, it's fine, but what's going to happen is the bars won't break down evenly. 6.5 trading hours, so you got one bar that's actually a 30-minute bar, depending on how the platform reads it. So don't use the hourly. 65 minutes is kind of the more normal one. And if you actually look at the one that I have, we've got 65, 130, 195. So those are kind of the ones I have set up in this platform. So depending on what I said earlier, just make sure these are kind of the time frames that you're kind of looking at, that they break down evenly. So in my case, usually I use the daily, weekly, and monthly. Sometimes I'll hit these, but not very often. But these are the ones that break out evenly, and so use those. Okay, let's see what else we've got.
Time frame. You can see right here I'm on the daily time frame, and we use this to tell the overall picture. We see it's in a downtrend. Since price is in a downtrend, that means supply zones are going to be very appealing to us. We want to trade with the trend instead of against it, and since it's going down, we want to look for a supply zone. Now,
yes and no. Sometimes you actually want to trade against the trend. There was trades I've done in the past many times which are very successful. Remember, buy low, sell high. Sometimes you don't want to go with the trend. Like here is one with Target. You might go in and buy, let's say, especially if you're doing with options, buy a vertical spread over here. It just pops a little bit and you're good to go and you're out. So you don't even have to go with the trend. You're just going for an overreaction to another movement, and then you're out of the trade.
If we look where price currently is right now, we see the supply zone right here. Focus on the bottom and the top of the green candle before the red.
Okay,
and see
I think this is good here on that one. Okay, no more results on the options trading. Maybe I do have to log in. Who knows? Let's see, options. Might have to make an account on one of these if you guys like these videos. Call options, explain. Let's see my top 3 stocks. Okay, let's see.
Trading options on a daily basis. These are my top 3 stocks to trade every single day. Stock number 1 is going to be Tesla. Ticker symbol TSLA. Tesla performed a 4-for-1 stock split this past year, making options premiums far more affordable. We all know Tesla's had an incredibly volatile year, and thus...
Yeah, volatility usually means more risk, so just be aware of that. That's fine.
Volatility is your friend when you are trading options on a daily basis. You can now...
Yeah, but it means more risk. So just understand when people say volatility, it means risk. Risk, volatility. But yes, you do have bigger option premiums with more volatile stocks because there's more risk involved.
I'll take an at the money or in the money call or put on Tesla for anywhere between $200 and $300 per contract, depending on the day of the week. And thus, this makes it one of my favorite stocks to trade on a daily basis. Stock number 2 is going to be Coinbase. Coinbase is one of the most volatile growth stocks on the market. However, it is highly correlated with Bitcoin. Now, given the recent volatility, we've really affordable here, and the
Okay. Let's see here.
IV is reasonable every single day. And at the money call or put is usually going to cost you between $90 to $200 on a daily basis, depending on the day of the week. Now,
Okay. Be careful buying things at the money. You do have a fast day to decay, but if you're day trading, I guess that might be fine. But you do get a delta of about 50, so you're moving about half the value of 100 shares. So yeah, you're good.
my third and final favorite stock to trade is Netflix. Netflix is a very volatile stock by nature, but this thing moves fantastic on news when it has it and can really travel anywhere between $10 and $15 in either.
Okay, that's fine. Let's see here. Day trading. There's a lot of day trading videos I'm noticing. Not as many options trading in this case. But I'll take a look here and see what else we've got here regarding some of these other options stuff, and then maybe I'll go ahead and make some more reaction videos for you guys and just see what's going on here with any of these option tradings. So let's see here. Can get your invest options side hustle. Let's see if
Amazon seller support. How may I help you?
Hi, I'd like to sell these Samsung Galaxy earbuds that I see online.
Do you have any in your possession?
No, I don't.
No worries. We can put those on reserve for you to sell if necessary. Do you mind answering a few quick questions for me?
Sure.
What price would you like to sell them at?
$99.
Perfect. That's about what they're selling for now. And when would you like to sell them by?
Probably early December.
Sounds good. So I'm sending you a contract right now. You can see that you're...
Yeah, it's a creative video for explaining put contracts. I get it. I don't know if we need to watch
This
the
is
whole
how
thing.
much I made this month trading options in the stock market. Look, I'm young. I didn't go to college. I graduated high school. That's it. It does not take a wizard to do this. Over the month, we did about 1,600%. There's the proof. Look, man, I thought options were gambling, a scam, whatever. Until I put my head down, started making money with it, stayed persistent, got a strategy. Now I don't have to work anymore. It's free game. This is how much I made this.
Well, I'm glad he doesn't have to work anymore. All right. Let's see. Options. What is this? For you page. Girl talks options when dating. We don't need that. Let's see. I think this is good. So anyway, you guys let me know what you think of these videos, if it's handy or helpful or interesting at all. A few things that made me laugh there. It's kind of, I guess, a fun thing to do on a Friday here or a different day, Thursday for me right now. But it's kind of one of those things to just kind of, hey, see what happens, see what's going on the web, and obviously just be aware that there's a lot of stuff that's fluffy out there and not always education. Sometimes for entertainment, sometimes it's just, hey, to push a product. Just make sure what you're doing is you go ahead and double check what you're actually learning makes sense and appropriate, and test it out yourself first before applying any real money. Anyways, thanks again. Enjoy the rest of the day ahead, and I will see you next time.